Hi, I'm Simon Brimblecombe. I'm Chief Technical Advisor, Actuary, and Head of the Regional Actuarial Services Unit at the ILO in Bangkok. So financing of social insurance is crucial to ensure sustainability of the scheme. But what does financing actually mean? Well, it means the contributions from workers and employers, it means the investment income on any reserves, and that is what we receive every year in the future, and that's what actuaries project. And going out of the scheme, of course, the benefit payments and administration expenses. And what we want to do in the actuarial valuation, where we project these cash flows over the future, is to have a contribution rate that's high enough to pay for these benefit payments and administration expenses every year, but also build up a reserve. So it takes into account if we have an event like COVID or there's some shock to the economy, that we're going to have enough money in the reserves to actually pay the obligations. This is very important. Social insurance really does what its name said. It's social, it includes as many people as possible. There's a redistribution. And insurance means that I am covered as a member for what we call life cycle risks. That could be losing a job, that can be an accident at work, death of a spouse. So there is a pooling of these contributions, and it's paid out to members meeting the eligibility requirements if there is a death, if there is a work accident, if there is unemployment. And this makes the scheme quite different from a private insurer, where the insurer will choose and select if you're able to subscribe insurance, will set premiums much closer to your individual risk. What we're doing in social insurance is ensuring that everyone is covered, because this is for the good of the economy as a whole. We don't want people left behind. We don't want those vulnerable not to get the benefits that they need. And this supports the future growth of Indonesia by having a good workforce, productive workforce, and avoiding people falling into poverty. So social insurance really is that. It's social, it's for the good of everyone in the economy and everyone in the country, and it means a prosperous Indonesia going ahead. One of the biggest challenges, not just in Indonesia, but in the region, is increasing inequality. Everyone recognizes, studies prove it, that increased inequality not only affects social cohesion, but reduces economic growth potential. Social insurance is one of the most effective ways for redistribution in an economy. That's because it covers millions of members, has a contribution rate that's related to salary, not like in private insurance where you pay an amount not related to salary. People are covered for benefits, and those, for example, in more risky working situations know that they're going to get a benefit for them and their family. It helps proportionately the worse off, but by including everyone in the scheme, you spread the risk. So everyone is covered, rich and poor, male, female, non-wage workers, wage workers, to make sure that Indonesia is able to face shocks in the future and ensure economic prosperity in the years ahead. There are some misunderstandings about social insurance. We are paying a contribution which is to cover us for a risk. This isn't put in an individual pot, it's invested together, and it pays out benefits to those who need it because there's been a workplace accident, a death of a spouse, or because they need to support children in education. Therefore, we are treating social insurance differently from private insurance or savings plan. And why is this important? Well, it's important because this is what an economy needs. We might think we like to have a lump sum benefit payment or an individual account, but in reality, what we need is actually a regular income when someone dies. What we need is to be covered, even if we've only paid 3 or 4 months, we still have this same injury from a workplace, whether we've worked 3 or 4 months, or 3 or 4 years, or 20 years. It's really important that this is a pooled approach that excludes no one, that we are in fact covering those who aren't so well off because they've been subject to an accident or a death, and that's very important for social insurance. There are 4 key steps to make sure social protection is financially sustainable in Indonesia. Number 1, be clear about what the policy and strategy is. What are we trying to achieve and how we're going to do that? Step number 2 is to have the data. So that means an actuarial valuation where we project forward the costs, benefit payments, administration expenses, and the revenues in the future. Number 3 is, once we have that, is to decide how we share the cost between employer and worker. And number 4 is to have a time frame for this. So sustainability is having the facts, having a political commitment, social protection, having tripartite agreement on who pays and the time frame, and then having the good governance to make sure those contributions are properly invested to provide decent benefits for as many people as possible in Indonesia in the future. So actuarial analysis is crucial input into ensuring the policy is based on evidence provided by the ILO, which is a neutral expert tripartite organization. We've been carrying out actuarial valuations for decades based on professional actuarial standards. The actuarial valuations not only allow us to look at sustainability issues, making recommendations on contribution rates and reserve levels, but it also allows us to analyse how coverage is improving, if benefits are adequate. So our recommendations will be not only sustainability, but also to improve coverage, make sure benefits meet ILO Convention 102, for example, and that leads on to good governance, good management, good communication of benefits to the population of Indonesia.